Street vendors or hawkers, also known as thelawalas, rediwalas, feriwalas, etc., are a vital constituent of the urban informal economy, and they play a very important role in bringing goods and services at our doorsteps. However, the lockdown due to COVID-19 has adversely impacted their source of livelihoods, and it is felt that they might have consumed their savings during this period. Therefore, there is an urgent need to provide credit for working capital to street vendors to resume their business. Recognizing this immediate requirement, on 1st June 2020, the Ministry of Housing and Urban Affairs has launched the PM SVANidhi, PM Street Vendors AATMANIRBHAR NIDHI, a special microcredit facility for providing affordable working capital loan to street vendors. It is a central sector scheme and it is valid till March 31st, 2022. This scheme has three major objectives. First, to facilitate working capital loan up to Rs 10,000 for a tenure of 1 year. Second, to incentivize regular repayment of loan. And third, to reward digital transactions by a cashback mechanism. The scheme covers all cities and towns of the states, union territories, which have notified rules and schemes under the Street Vendors Act 2014, protection of livelihood and regulation of street vending, including in the state of Meghalaya, which has its own Street Vendors Act. The loans under PM SVANidhi are collateral-free. The vendors availing loan are eligible to get an interest subsidy at 7% on regular repayment. The interest subsidy amount will be credited into the vendor's account through direct benefit transfer on quarterly basis. The interest subsidy is available up to March 2022. There will be no penalty on early repayment of loan. On timely or early repayment, the vendors will then be eligible for the next cycle of working capital loan with an enhanced limit. In line with the Digital India program, the scheme also aims at incentivizing digital transactions by vendors by a monthly cashback mechanism in the range of 50 to 100 rupees. The vendor will get Rs 50 cashback on executing 50 eligible transactions in a month. For next 50 transactions in a month, additional cashback of Rs 25 will be provided, and for additional 100 or more transactions, they will receive another Rs 25. That means, on reaching 200 eligible transactions in a month, cashback of Rs 100 will be provided in their account. Each transaction of Rs 25 and above will be counted as eligible transaction. The cashback incentive will be implemented through the network of lending institutions and digital payment aggregators like Bheem, Paytm, Google Pay, Bharat Pay, Amazon Pay, Phone Pay, etc. The digital transaction will help build the credit score of vendors for enhancing their future credit needs. In order to encourage the lending institutions to offer loans to street vendors, the scheme has a provision of graded guarantee cover operated on portfolio basis. This is administered through the Credit Guarantee Fund Trust for micro and small enterprises. The scheme offers 100% cover for the first default up to 5% of the loan portfolio. It also covers 75% of the second loss beyond 5%, up to 15%. The maximum guarantee cover will be 15% of the year portfolio. Lending institutions can file their claims on a quarterly basis. The scheme implementation will be facilitated through an integrated IT platform with mobile app developed by the ministry. This platform integrates street vendors' database across the states and union territories, business correspondents, constituents, agents of lending institutions, digital payment aggregators, Paisa portal of the ministry, and Udayami Mitra portal managed by SIDBI. Now let us understand who are eligible under the scheme. Any street vendor engaged in vending in urban areas as on or before March 24, 2020 is eligible. The scheme covers all street vendors broadly in 4 categories. First category is of street vendors who are in possession of a certificate of vending, identity card issued by urban local bodies based on a survey in terms of the provisions of the Street Vendors Act 2014. The second category includes all those vendors who though have been identified in the survey but are yet to be issued a certificate of vending or ID card. They are eligible on production of a provisional certificate of vending, which would be generated through an IT-based platform. ULBs are encouraged to provide regular certificate and ID card to such vendors within a month. The third category covers the vendors who were either left out of the ULB-led identification survey or they began vending after completion of the survey. And the fourth category covers the vendors from surrounding rural areas vending in the geographical limits of the ULBs. The vendors covered under the third and fourth category will be provided with a letter of recommendation by the ULB or Town Vending Committee. For issuance of the letters of recommendation, any of the following supporting documents will be required. 1. The list of vendors prepared by certain states or union territories for providing one-time assistance during the period of COVID-19 lockdown. 2. Loan application processed by a lender along with the recommendation certifying that the person is engaged in vending business. 3. Proof of membership details of vendors associations such as NASVI, NHF, SEVA, etc. 4. Any other document supporting his claim of vending like challan, chit, etc. Or 5. Report of a local inquiry conducted by ULB or TVC involving SHGs or community-based organizations, etc. on receipt of a request on plain paper from the vendor. Now, let us understand how the vendors can access the loan. A variety of lenders have been enrolled to provide loan under PM SVANidhi. This includes scheduled commercial banks, regional rural banks, small finance banks, cooperative banks, non-banking finance companies, microfinance institutions, and SHG banks established in some states or union territories. The lending institutions will use extensively their network of field functionaries known as business correspondents, constituents, or agents to ensure maximum coverage of the scheme. Whereas in the states where MFIs are not operational, the existing robust network of SHGs and their federations may be utilized to complement the efforts of lending institutions in mobilizing and generating loan applications for street vendors. Such states can devise a suitable incentive mechanism for the SHGs. The rate of interest levied by lenders may vary. The scheduled commercial banks, RRBs, SFBs, cooperative banks and SHG banks will charge rates as per their prevailing rate of interest. In case of NBFC, MFIs, etc., interest rates will be as per RBI guidelines for the respective lender category. In respect of non-NBFC MFIs not covered under the RBI guidelines, interest rates under the scheme would be applicable as per the extant RBI guidelines for NBFC MFIs. To make the audience appreciate the scheme better, for a loan of Rs 10,000 sanctioned even at rate of interest of 24%, the total benefit from interest subsidy and cashback on digital transactions will be about Rs 1,600 per year, which is more than the entire interest paid on the loan. The entire loan application process is online. Initially, the Aadhaar and mobile validation is undertaken in the mobile app or portal. On successful verification, the application filed on the portal or mobile app and all relevant documents along with a photograph are uploaded. The uploaded details are forwarded to the preferred lenders. In case no preference is indicated, the application is picked up by the willing lender. On successful submission of the application, the document shall be reviewed by the lending institution for sanction and disbursement of loan. On sanction or rejection, the beneficiary will be intimated through SMS on the registered mobile number. The lending institutions prefer joint liability group mechanism in view of the better repayment record. ULBs will, therefore, encourage formation of CIGs which can be converted into JLGs. The list of CIGs will be shared by ULBs with the lending institutions, and the lending institutions will share eligible JLGs of street vendors formed with respective ULBs. A comprehensive capacity building plan is part of the scheme to build the capabilities of different stakeholders. For outreach and communication, ULBs will use appropriate mechanisms like installation of hoardings, use local radio and TV channels, and deploy innovative digital methods. ULBs are advised to prepare a roadmap for capacity building of street vendors to conduct e-commerce. A kickstart meeting of all stakeholders will be organized by the ULBs to start implementation of the scheme. Now, let us understand about the scheme's implementation and monitoring structure. SIDBI is the implementation agency of the Ministry for Scheme Administration. At the central level, there is a steering committee chaired by the Secretary, Housing and Urban Affairs, Government of India. At the state or UT level, a monitoring committee is chaired by the Principal Secretary, Urban Development, which shall meet at least once every 3 months. And at the ULB level, the committee is chaired by the Municipal Commissioner or Executive Officer and supported by the TVC to monitor implementation of the scheme. This is a time-bound scheme and hence requires all stakeholders to work together to help street vendors become self-reliant.